Come with me to a magical place where being labeled the pork queen is a compliment, where being nice is just a way of life, and where all leaders of the free world must pass through. Welcome to Iowa. Whether you're a current Iowan, an Iowa expat, or an Iowan at heart, this show is for you. This is the Iowa Podcast. Real Iowans, real talk, no drama. From the Brady Dental Care Studios, I'm Justin Brady, and yes, it's tax season. That's not fun. Not fun at all. It's April 18th is tax day. I'm not a numbers person. I think you all know that. Numbers scare the crap out of me. So we've invited Drew Pells into the studio, co-owner of JT Pells Accounting Services. Drew, thanks for coming on the show.
Yeah, of course you got it. Thanks for having me, Justin. And for everyone who's listening right now, we met like 2-3 hours ago.
Yeah, we met today.
So like anything you're going to ask me, you may not have ever heard me talk about.
Yeah,
anyway,
well, that's actually the way I do this show.
Oh, really?
Okay.
Yeah,
I don't actually do pre-interviews with anybody. Maybe people think that's how podcasting works and radio works, but I kind of generally know where it's going to go. So before we get started, everybody, make sure to subscribe. It's on Google Podcasts. It's on iHeart. It's on Apple, Spotify, all the podcast players. We bring you a new Iowan with really good information you need to know every single week. The only way you get alerted is by going into your favorite podcast app and hitting the subscribe button. If you're listening on a website somewhere, the way you find this is quite easy. Just go to iowapodcast.com. All the players are right up there at the top of the page. So, Drew, first of all, I want to start broadly. Obviously, we need to do this disclaimer thing because there's some laws around tax talk and that kind of stuff, and it's basically meant to protect consumers from not making dumb decisions. So, obviously, if you are listening to this right now, we're going to talk about some tax stuff. This is not advice for you. What you need to do is go to your CPA, your lawyer, whoever. You need to ask them what is right for you. This is a general educational overview only, and it's helpful because if you say, hey, I heard this thing on the podcast, does this apply to me? That gives you a starting point because tax people are fallible. They can miss stuff. That actually just happened to me a couple last month.
Oh, that's not good to
I know,
hear.
they didn't check a box. And
how important was that box?
It was $2,000 worth of importance.
It's very important to me, if you ask me. Yeah.
It was a very important box. So, okay, so let's start here. So there's our disclaimer. We got to tell everybody that. But let's start here. COVID. We saw a record business creation nationally, of course. But we saw record business creation here in the state of Iowa. Lots of W-2 people going into, what is that, 1099 or whatever that's called?
Yeah, so basically the way I like to break it down for people is when it comes to taxes, there's basically two teams that the IRS divides us into. Mm-hmm. And there's one for W-2 employees, which is, your 9-to-5 job,
yep.
Here in Des Moines, Wells Fargo, Principal, things like that.
Right, yeah.
And then there's 1099, which is contractors. I like to say business owners or investors. Mm-hmm. I think it's a little bit more encompassing. And unfortunately, if you are a W-2 earner, you're on the wrong team when it comes to taxes. That's the IRS. That's the way that they divide it up. And the reason that I say that is you don't really have too many deductions that you can take. Now, there are some things if you're in the, $300,000, $400,000, $500,000 W-2 salary range, we can talk about that a little bit later. Mm-hmm. But just in general, unfortunately, you don't have many options where as a business owner or as an investor, that opens the door to all of these types of things, whether it's the Augusta rule, whether that is hiring your kids, S-Corp. There's tons and tons of deductions. And, us at JT Pells Accounting Services, we use upwards of 200 depending on the client. And so, like you said, Justin,
200,000?
No, 200 strategies.
Oh, got it.
Yeah, 200 different strategies that we can use. And like you said at the beginning, everyone's situation is a little different. So
yep.
I'm looking right at the mic right now, not even at you.
He is. I can confirm that.
Everybody, make sure to consult your CPA, your tax professional, because everyone's situation is a little different. But today, we want to go over some things that business owners, you guys can use to help you, W-2 employees as well. Because there are some things, it's just that when you become a business owner, like you said, over the past few years, especially here in Iowa, you have the opportunity of a lifetime to basically live tax-free. It takes some work. Still, you can do it, and it's as long as you have the right people on your team, if you have a tax strategist to help you, then you can definitely make it happen.
Now, what does that mean, though, tax-free? Because no one in this country, I mean, I'm sure there are some people, but like, does that mean we don't pay any taxes at all? How is that even possible?
Yeah, so I'm referring to...
And then we have a lot of stuff to go into, but I just want to ask about that real quick.
Yeah, no, absolutely. Great question. So I'm referring to income tax, because you're right. Sales tax, when you buy something, you have to pay it. There's no way around it, right? Certain taxes when it comes to work, employees get taxed on this, that, or the other. Business gets taxed. Like you can't do anything. So yes, I am referring more to income tax. I'll tell you this, somebody at Wells Fargo here in Des Moines makes $500K. Maybe their spouse also makes another $300K. They're paying a lot in taxes every check they get. So, everybody, you do have to pay them, but there's ways that we can reduce that. Again, if you're a W-2, you are limited. Business owners have tons of them, but yeah, we're talking more about income tax right now.
And it's like when you said that, because I thought that was a bit of an extreme idea, right? And so I was like, tax, that's not a thing, man. Like you can't actually cut all your taxes. And so on this show, what we try to do is get a bunch of diverse perspectives that are different, stuff I haven't heard of. And so hopefully some of these strategies people can take to their CPA and say, hey, can I do this thing? So one of the things you said, you're on the wrong team, which I thought was interesting, W-2 employee. Now, I've worked for myself for a long time, since I was right out of college. And so apparently I'm on the right team. What does that mean though? Like W-2 people just don't have the options a 1099 person like myself does to write stuff off? Is that basically what that means?
Correct. And this is why. I'm not saying you're on the wrong team, because for a lot of people, no, seriously.
Yeah.
Right. For a lot of people, if you make $400,000 or $500,000, I would never, ever encourage you to quit your job and go start a small business.
Yeah.
Like, you're probably doing pretty well for yourself, but wrong team in terms of taxes and living tax free is more what I mean. And so, oh my God, I lost my train of thought. But yes, you can do it. So as a W-2 employee, there's certain things. I'll give you an example right now. If you're very philanthropic, you should create a private family foundation is what it is. It's like a nonprofit, but it's private. So basically what it is, right, I'm a big baseball fan, me. If I wanted to start a foundation that sponsored Little League teams and things like that, I can donate the money to my foundation. I get a tax write-off for that. And then the foundation, since it's private, I control it. So I can use it to sponsor Little League teams. I can use that money at my discretion. Now, it does have to be for the foundation. I can't go on a trip to Vegas or anything like that.
Right.
But that's the point, is if I'm earning a lot of money, if I'm philanthropic, I want to give back to something that I really care about, which is for me, baseball and kids playing. We just had the World Baseball Classic. I wish it was bigger in the US, but if that's something I want to do, then that's how I would do it. I would use a private family foundation and you get some sweet tax write-offs. So that's an example. That's
instead of just donating right out of your personal checking account, right?
Yes.
Like this is what you're talking about. You're saying if you're donating a lot of stuff to a lot of entities, instead of doing that, put it into this foundation, and there are some write-off benefits or some tax-saving benefits for doing that.
Sure, absolutely. And here's the thing I would ask you, though, is how important is it to you? And what I mean by that is, for some people, giving $1,000 to this charity, $1,000 there, that's great. They love it. Like that matters to them. And so I would say, if that's important to you and you like it, keep doing it. Don't change because I'm saying you get tax write-offs. That's one thing I want to make clear is, never spend for tax write-offs. Spend because you'd be surprised. Spend because you have to spend for your business.
Right.
Spend because you have kids. Then take advantage of the tax write-offs that you get with it. Yeah, so that's one thing I want to make clear.
A lot of people say that though, right? They're like, it's a write-off. And they almost throw that language around, business owners specifically, right? They'll buy someone's coffee, they'll whatever. I know the rules, I think, changed on entertainment. We might not be able to get into that later, but they'll just throw this terminology around, which means, it's a write-off, it's fine. Almost like it's free. So what does that mean when someone says it's a write-off? What is that?
Yeah, great question. I think a lot of times people see these tax words, legal words, and they freak out. Yeah, completely understandable. This is all a tax write-off is. It's a business expense that makes your taxes go down.
Sure.
And then you get to keep more of your money. Yeah. Because the government's taking less. And that I'm a big fan of that.
Me too.
Right. So starting we all are. Starting the private family foundation, it's expensive to get everything going. The benefit is you get the tax write-off. You get to control where that money goes, and you enjoy it. You're philanthropic. So that's why we want to take these tax deductions, right? Again, in that example with the private family foundation, you have to create it, right? In a different example, the one you brought up with the coffee, right? That person, the business owner, they're already going to spend money on coffee. I don't know if I should do. I'm going to do it. I'm going to give you guys a little bit of a hack.
Yeah,
here.
please do.
So, in terms of meals or food, drinks, things like that. So, a couple rules first, and then the hack. First thing is you always have to pay for everybody's meal. So, Justin, you and I go out for coffee after this. If we split, nope, that's not a tax write-off.
Oh,
so I have
sure.
to pay for both of us, or you do, I guess, either way. Then you can get the tax write-off. So that's a big thing.
Yeah.
The other thing is, yes, you have to keep your receipts. Here's how you can do it more efficiently. Instead of keeping your receipts and then going in April with a shoebox to your CPA, don't do that.
Wait, we're not supposed to do that?
I'll tell you this.
That's actually, I did that for years.
So at
I
our
totally did that.
And understandable, because you're not sure what to do, right?
Yeah.
We're the tax people. I'll tell you this, you can do that at our office. We'll charge you probably $10,000, $15,000.
To go through it all,
Oh,
yeah.
yeah. We'll charge you a grip. Oh, yeah. But here's what you do instead, is you get your receipt, right? In our example, coffee, there's a bunch of places right here. So we write coffee to discuss podcast, right? That's a business event. Write it on the receipt, snap a photo, immediately upload it to QuickBooks or whatever accounting software you have. Toss the receipt, you're done. And the importance of that is, one, get rid of the receipt. You don't need the clutter or anything. But also, you've just documented what you did. You wrote on the receipt, I was with a client or a podcast guest. So heaven forbid the IRS comes knocking. Yes, that was a business meal. Look, here's my receipt. Here's what we talked about.
Yeah.
You have all the documentation.
Should you write that on the receipt?
Absolutely.
Notes? Like, here's what we talked. Okay,
So
got
you-
it.
you
So it's
don't
not
need an
good enough
agenda.
just to say, I promise it was a thing. You have to say, look, here's where we were. This person was with me. They're a customer. Yeah.
I would say, and this is why, in the words of, I believe it was Remember the Titans, leave no doubt. If your IRS audits are less common than people think, still, if you're worried about it, which is completely understandable, just have all your ducks in a row.
Yeah.
And leave no doubt with the IRS. So if you can write on there, again, something simple, just if you put meal with client, meal with vendor about new marketing campaign, whatever it is, just one little sentence like that. And when the IRS looks, okay, that's a business meal.
Yeah.
You're all good. You don't have to worry about it.
I want to go back to something you said. You mentioned, you're rattling through just some things that people need to be aware of. And you said something interesting. You mentioned about like business owners working with kids or hiring their kids or something like that. So that kind of resonated with me briefly, because here in Iowa, we have a lot of locally owned businesses, and their students or kids work with them to make a paycheck. I know I did that in high school. I worked at my dad, I cleaned my dad's dental office. Sometimes I didn't clean my dad's
Interesting.
dental, So when is there something business owners can do that's favorable for taxation? And just to be clear, I 100% believe in paying what I owe in taxes, 100%, because I believe in strong cities, strong states, strong communities. What I don't want to do is pay over what I'm supposed to pay, because I've actually been down that road. I switched years ago. All I did is switch CPA, and lo and behold, I was overpaying by like $5,000. So I want to pay for my fair share. I don't want to pay over. You know what I mean? So just a little disclaimer there. But what's up with the family, right? Like having your own son or daughter work for you. How is that a tax write-off? I don't understand that.
I agree with you, right? I'll pay what I need to pay.
Yep.
I'm not leaving tips though. That's for the restaurant.
Yes, I like that.
I'm not leaving tips. I'll tell you that.
I'll pay what I want to pay. I don't want to leave a tip for the government.
Exactly.
That's hilarious.
Honestly.
I love that.
Yeah. So hiring your kids, and actually here in Iowa, we have a pretty sweet setup. So we are what's called a farming state. So basically you can hire your kids since birth. As long as they're breathing, you can hire them to work for you. Now, the way we do this is hiring kids gets you up to, this year, it's a little over $13,000. I don't remember off the top of my head, but it's a little over $13,000 in tax deductions per child per year.
Really?
So if you have 2 kids, you can get up to $26,000 in deductions. 3 kids, 39, etc. Again, as we said earlier, don't have kids for tax deductions since you have them.
That's kind of also an ethical thing too.
Yeah, I mean, don't get me wrong. I'm single now, but I do enjoy, the child making process every now and then. But don't have kids for tax deductions. That's for sure. So here's what you do if you have a small business in Iowa. Let's say, for example, first you have to make sure you can afford it. If you're a small business, you're making $20,000 a year, you're probably not paying taxes. So you don't need to worry about lowering them, and you probably can't afford to pay your kids. So that's one thing. But the way it works is hiring your kids, there's a special exemption from the IRS where basically if they're under 18 and it is the child of the owner, so not grandkids, not cousins, then it's tax-free. If they're under 18 and under the standard deduction, which is the 13 and change, as long as they make under that, they don't have to pay, I believe it's the Social Security tax. Don't quote me. I can't remember which ones are paired, but basically like the withholding taxes that come out, when you get your check, you don't have to pay those. So you as the child don't have to pay income tax. You get pretty much your entire check. And as the business owner, you are deducting the wages of your employee. So just like if you had a restaurant, right, you have a dishwasher, doesn't matter if he's 45 with 18 kids at home or if it's your own child who's under the age of 18. It's an employee basically. And you asked earlier about like, oh, well, like documentation, what do we need? At least at our firm, the way we do it is with our clients, we have example contracts. We help them say, okay, what do they do for you? So actually, let's use you as an example, Justin. You mentioned your dad had a dental practice?
Yeah. He's retired now, but yeah.
Sure. And what did you do to help him? For example, did you ever sit in the front, kind of greet clients as they came in? Did you help carry things into the office, rearrange if he was moving or something like that?
Cleaning. It was I did a bunch of cleaning.
Absolutely. I hope he didn't make you do the bathrooms.
I did.
Worst.
Oh yeah.
Well, I'm sorry to hear that. But essentially, right, you have to clean your office. He could hire a janitor.
Yeah.
Or since you're already doing it, he might as well just pay you. The business still gets a tax deduction. You, as the child, you get money in your pocket. And as the parent, think about this. You're making your life tax-free, right? Because your dad, when you were a kid, he was going to pay for Little League. He was going to take you out to dinner. He was going to buy you clothes. He's going to buy you toys.
Right. Yeah.
Well, now he's your parent. He's on the account with you, your bank account. Well, what if now that wages that he paid you is now what you're using to buy a new bat for Little League?
Now, is this like on top of, and this is another term I don't understand, but is this on top of like a dependent write-off? Because I think you hear that like, oh, I can write off my kids or something. Is this the same thing or is this different because of a...
Yeah, so that's something different. To make sure we don't confuse people, I kind of want to leave that to the side.
Sure.
So yes, you're right. There are caveats depending on who can claim you as a dependent and how that works, right? If you're married or divorced, there's different things, who's legally on paper as the owner. So yes, like we said earlier, always make sure to consult your tax professional.
Absolutely,
but the gist of it is, as the business owner, you're hiring an employee. It happens to be your kids, and there are special exemptions from the IRS to where you don't have to pay, the child doesn't pay the taxes on it when they get their check. And then, like we said, you're deducting these. So essentially, right, you pay them wages. You use those wages to buy cleats for baseball, to take a girl on a date, whatever it is. Well, that money went into his account for a business before taxes, not after, right? In the scenario that your dad had, unfortunately, he was paying for all that stuff for you after already paying taxes. So that's the benefit, is you're getting it before the taxes hit. So that's one thing, I guess. I'm not sure if everyone knows this, but right, as a W-2 employee, you get your check, money is gone, right? So you get paid, you get taxes taken out, then you spend whatever you have left.
Right.
Where business is a little bit different.
It is, yeah.
Right, you make your money or the revenue, right? Then you spend it on anything. So you spend it on hiring your kids, you spend it on wages for other employees. You spend the money that you need to, then you pay taxes on what's left. So that's why we like to describe it as it's tax-free, because you're paying those wages to your kid before it gets taxed.
Right.
Essentially.
Oh, sure.
So that's the benefit. So you can hire your kids if you work in a restaurant. They can be your server. They can be your, well, maybe not bartender if they're not old enough, but a busboy is what I was thinking of. So yeah, you can do that and you pay your kids. And think about this. Why do you think your dad had you go to the office? Like, yeah, to clean, but more parent son, what do you think he was wanting to do?
Give me a job and experience, probably.
Yeah, but probably spend time with you also, right? Father-son time, bond, hang out.
Oh, I did that in the evening when it was closed, so he was at home.
Well, sure. But
yes, there was that too.
And so as a parent, you get to pay your kid to do real work for you, right? Whether it's helping you do paperwork like an admin, if it's working at a restaurant like as a busboy or something, right? If they're younger than that, here's an example for a company. If you are a family-owned company, like you brought up in the beginning, here in Iowa, well, family photo shoot. And now it's the photos that you put on your website, on your social media campaign.
Oh, sure. Yeah.
It's for the business.
Yeah.
And then if you have a few extra ones in clothes that are more normal, if it doesn't fit your marketing campaign, that's fine. Well, you still have them, but that's a business expense. You used it. Instead of hiring child actors or models, you hire your kids. Yeah. And again, this is all legitimate. This is all the IRS tax.
I love the thing you said earlier, leave no doubt.
Yeah.
You know, if you can't prove it, if an IRS agent's at your door saying, was this a business expense, and you can't prove it, or you know that conversation will be difficult, you're probably in a gray or a bad area.
Yeah. And we don't want that when it comes to the IRS.
They're not very forgiving, the IRS.
They're going to I'll tell you this, they'll side with themselves. They won't side with you.
Yeah. Well, it's always funny because like I was looking up before this just to make sure I had my ducks in a row. Like, why do people, even tax people or co-owners of a tax company, CPA company, why do they always say this is not blah, blah, blah? And it was like, basically they don't want to get sued and they don't want to, like there is this basic idea they don't want to bring harm to people who listen to that advice. That's the idea, not bringing harm. But the government doesn't really care about bringing harm to you. They care about bringing harm to themselves. You know what I mean? Because I was paying more and they didn't care about that I was overpaying, but they said they do care if you're underpaying. So that's the harm they actually care about.
I couldn't agree more.
You mentioned the Augusta rule as well briefly. Actually, I overheard you this morning talking about that. Mm-hmm. But what is that? Because you mentioned about that was another clever write-off strategy, I think is what it is. Another way to save taxes.
Yeah, so the Augusta rule, and anybody listening, I don't expect them to know what it is. Here's my translation. It's tax-free rental income. And it's really simple. There's just 5 steps, all you need. And so this is what I was speaking on this morning.
No, rental income, like you have to be a renter of an apartment or you can be a homeowner.
You beat me to it. So it's just 5 steps. And most people already qualify. So you have to own a home and own a business, which I rent, so I cannot do it. I rent my personal residence. I don't own a home. Mm-hmm. So I don't qualify for the Augusta rule. Most people listening, do you own your home then?
I do,
Justin?
yeah. Mm-hmm.
So, and then you work for yourself. Mm-hmm. I'm not going to give away too much, but most likely you can do it as well. I won't dive in too personally with you right now. But
because then people will get really bored.
Well, no, not that. So I want to give an example, but more we're going to get into way too many if-thens.
Yeah, totally.
So let me back up a little bit. So again, you need to do the Augusta rule, you need to own your home. You need to own your business, which a lot of people do, especially here in Des Moines and in Iowa. And then the other thing that most people are already doing is you need business use for your house. And what I mean by that is you own a business, right? If you're going to have an event, if you're going to have meetings, maybe you rent office space like we're in right now, shared space. Maybe you rent a conference room at a hotel because you're having a massive event for 500 people. You need to rent space. Well, that's a tax deduction, right? It's just like any expense. Well, with the Augusta rule, what you do is you rent your house. So let's use me as an example. So Drew's LLC rents Drew's house. Drew's LLC writes a check to Drew for renting the house as, here's my payment for using your space. Drew receives the income, cashes it, and the government specifically says you don't have to pay income on that.
Got it.
And so there's 14 days that you can do that with the Augusta rule. Now, again, me personally, I rent, so I cannot do this.
You can't sub-rent. You can't sublease it or something. That doesn't work.
That's probably more getting into like what your renter's agreement, or like if you like have a condo, like your HOAs.
That's like a gray area.
Well, not in terms of taxes.
I can see your gears turning, by the way. You're like,
yes, it's not a tax gray area. It's like your homeowners association gray area. That's the thing, right? Because some HOAs allow you to paint your house green. Some don't.
Yeah,
some allow you to use Airbnb. Some don't. So that's why you kind of have to check there. But you have to own your primary residence, and you have to own a business in order to do it. So those are the two that most people are already doing. So then most people are probably thinking, well, how much do I charge? $1 million a day? I wish. If you live south of Grand, that'd be great. If you live in Beverly Hills, but you have to charge what's a reasonable rate.
Yeah. Oh, okay. Got it. So you have to look at market value or something.
Exactly. And right now, what's the easiest way to find the daily price to rent a house?
Daily price to rent a house?
Yes. Airbnb.
Oh, yeah. That's good.
That's all it is.
Sure.
And so if you go on there, you look for a place that's the same size as your bedroom, as your house, 3 bedroom, 2 bath, whatever you need that's similar to your place, and just kind of take an average. Most of the places around you are $100 a night. Cool, let's use that. That's reasonable. That's market rate. Earlier, we talked about having all your ducks in a row. If somebody is super, super nervous about an audit, understandable, take a screenshot. Have the dates in there that you're looking up on Airbnb. And then you have all the proof in the world. And when you take that screenshot, you know what else is coded on the computer? The day and time you took the screenshot and blah, blah, blah. So if you are super nervous, there's always ways you can document it, or there's always ways to have more documentation. You just have to do it. So you have to use a reasonable rent. And if you're having meetings at home, you have an agenda, right? You have a calendar invite. Those are your receipts. Just like you get a receipt for coffee earlier we talked about. Well, your agenda, your meeting minutes, those are your receipts for the meeting. So you have that.
Why is this stuff new to me? Is this just stuff my tax person's doing and not telling me about? Or are they not doing this? Is every accountant, CPA, are they all just scared of talking about this because they don't want the IRS breathing down their neck? What's the reason behind that? It's kind of frustrating.
Sure, understandable. Yeah, I mean, same thing. If I went to my mechanic, and one mechanic told me, "Oh, it's going to be $10,000 to fix your car," and another guy said, "Oh, it's going to be $1,000." Like, can you guys figure out a system or something?
Yeah.
So I completely understand where you're coming from, and I agree. Full disclosure, I am actually not a CPA. The other half of JT
your
Pells
brother
Accounting
is
Services, he's a CPA. JT, yes. I don't have that background. The reason I think I can kind of talk about a lot of this stuff is because I don't have that background. I can use layman's terms. I can explain it easily to people. More specifically to your question, why hasn't your accountant talked to you about this? I'll give you a couple of reasons. For your accountant, your CPA that you've had since you've had businesses and whatnot, how often do you meet with them? Is it right around now, tax time?
Yeah,
just once a year?
Yeah, it's once a year. Yeah.
So that's not your fault. It's not his fault either, or her fault. The system is set up horrifically to help people save in taxes. And this is what I mean. Generally, like you said, most people see their tax person in the springtime once. The problem is 2022 is over. You can't get any more deductions.
Sure.
It's in the past.
Yeah.
You have to do it in real time. So if you're meeting with your CPA throughout the year, then you can. Because if you meet with him after tax season, so let's say, May 15th.
Now, you can still make retirement contributions up to a certain point for backdated years or something.
So,
I think,
yes,
right?
there are certain things.
A couple little tiny exceptions there.
Yes. So there are certain things that you can do. And it's very common. You'll see in December, people search, how do I lower my taxes? And it's very common.
Yeah, I bet it is.
And it'll be retirement contributions. There's, I think, health savings accounts, I want to say, are generally in that list.
Oh, I've heard about that.
So there are things that people kind of panic to do at the end of the year. But this is why I say...
It's probably not the best time.
Well, this is exactly. What are you doing around Christmas time? Traveling, visiting family.
Yeah, that's what most people are stressing out about activities and stuff like that. Yeah.
So now you're going to add on top of that, struggling for this tax document from 9 months ago?
Yeah, so plan it out. Right now, you should be thinking about 2023 taxes and filing them next year, not by this December. And that's what we did at my house, right? My wife and I met, and she is really good with numbers. We dug into this. I didn't really know, honestly. I had someone else doing my retirement stuff, and I just didn't think it was going that great, and I learned this stuff myself. And so I guess my financial planner will know this now, but I'm testing him to see if I can get better gains than he can doing it myself. Yeah, right. So learn the stuff is the bottom line there is you can learn this stuff. You can call your CPA and say, hey, let's work together. I want to do better. I want to lower my taxes. And I'm sure that's something they'll say, please come in. Let's talk about it. Right. Yeah. But last few minutes, I want to also ask about, for business owners, is there some basic checklist? Is there some mnemonic device? Is there some 5 steps to do a better job this year in 2023 we can leave them with?
Yeah, sure. I'll give you 2 things. I'll give you that and some extra.
Perfect.
So we always encourage all of our clients, and we meet with them throughout the year, to call us. Like you said, please call me. Please talk to me. We sit down with them quarterly or monthly, depending on who they are, and we say, what are your goals? What do you want to do this year? And we go over that with them so we can, like you said, work throughout the year. If you're a small business, it sounds great, hit the pause button. And this is why. As a small business, you need to make money first. If you're not making money, you're not paying taxes. You don't have a tax problem. You have a revenue issue. I won't say problem. Revenue issue. You need to increase it. And that's fine. We all have to start somewhere, right?
Yeah.
So that would be my first thing is for any small business, make money first, then worry about saving it in taxes. Because if you're not paying taxes, you can't save in taxes. Another solid thing we always tell small business owners is business, personal is personal. And especially,
true. That's true.
Especially if you are just an LLC, you are not an S Corp. Make sure everything's in a line. I'm not going to get into the nitty-gritty details. But business is business, personal is personal. And then, again, like we talked about, heaven forbid there's an IRS audit. You've got everything separate. You don't need to look at your personal stuff.
Yeah.
So that's one thing as well. And then we like to call it, it's kind of our name for it, the Power 5 tax deductions.
Okay.
And every single business owner can take this. And anyone listening, start with these today. Number one, the home office. If your accountant or CPA has told you not to do it, I significantly disagree without knowing your situation. So either double check with them or call us, one or the other.
Yeah, that's fair. Like go back and say, hey, hold up and have that discussion.
Yeah. So the home office, and you have to start with that one because once you have a home office, that's really the launching point into everything else. Then you can start writing off your miles on your car. And the easiest way, Mile IQ tracks everything for you.
Okay.
It's an app. You download it, create your account, never touch it again until you print out the year's results. That's it. Super simple.
Good.
So home office, track your miles. Another one is meals. So kind of like we talked about. And the trick, I realized I forgot earlier to talk about it, is me and my brother, we're already going to spend money going out, hanging out. We're also going to talk business.
So talk business.
Yeah. So if we talk business and we're already going to go eat McDonald's, well, not McDonald's, that's now a business meal.
Your secret's no longer safe. I mean,
but we are talking business, honestly.
100%. 100%.
I'm a Burger King guy. No, I'm just kidding. Travel as well. Same thing if you work with your spouse. You guys are going to go on vacation to Hawaii, and let's say you're a real estate investor. Go check out some properties. Meet with some potential people that you can work with. Now it's a business trip. You have to do business.
Yeah.
You have to do business. I'm in no way encouraging fake stuff. No. You have to do business.
Yeah.
Here's how you make your life deductible with these things. Writing off your meals.
Yeah.
Writing off your travel. Writing off your car, your house. And I feel like and the last one is like accessories, like your cell phone. I mean, Justin, think about this. You and me earlier, we were texting to get back and forth here, right?
Right.
Everyone's using their cell phone.
Yeah, I mean, like my wife was asking me, she said, how much do you think you spend business on my cell phone? I'm like, gosh, it's definitely 90% or more, but let's just do 50% to be safe is kind of the conversation we had.
Yeah.
But yeah, I was like, 50% is that's me tipping the IRS for sure.
Oh yeah, absolutely.
Drew Pells, co-owner of JT Pells Accounting Services. Thank you for coming on the show. What is the website people can go to learn more about what you do, to reach out, to ask questions?
Yeah, thank you for having me, Justin.
Absolutely,
I appreciate it. First, I mean, I hope I provided some value to you as we're 100%. Talking, and obviously everybody listening. And, for anybody listening, if you are a business owner in particular, and you think, man, I've never heard any of these ideas. Like, I need to start saving on taxes. If you want to save for retirement, you got to start saving taxes now. You can't start saving at 65. You got to start saving at 25.
Yeah.
And the easiest way, lower your taxes because it's free money in your pocket. It's your money.
Yep.
And that's what we help you do. So jtpells.com is the best way to do it. It's pretty much the two of us in the office every day. And we do our best to make sure everyone keeps as much of their money as possible. And then they can go around and accomplish their dreams. If they want to get a new motorcycle, they want to get the man cave downstairs. They want to pay for their kids' college before their kids are even in college.
I appreciate that. Yeah.
There's lots of things you can do.
No, I appreciate all that. And just a reminder for everybody, this is an educational thing. This is not tax advice for you. You need to go to your tax person and ask these questions. If you're making a decision based on what we've told you today, you could very well get yourself in trouble. So make sure to ask an expert. If that happens to be Drew, give them a call if you don't have one. Drew, thank you for coming on the Iowa podcast. I appreciate it.
You got it, Justin. Thanks for having me.
And to my fellow Iowans, Iowa expats, and Iowans at heart, thanks for listening and subscribing to the Iowa Podcast.